How life insurance loan works. I want you to imagine two circles. And one circle is called the cash value, and let's say there's $100,000 in it. That's for your living benefit. And the second circle is called the general account, and in that general account, there's billions of dollars in it. That's the life insurance companies. Let's say you saw a rental property for $50,000 and you want to purchase it. So you take a loan against your policy, which will be collateralized against your cash value and death benefit. So here's what's happening. Remember the general account? Well, the life insurance will give you $50,000, but there's a catch. It depends on which product you get, but let's just say it's a 4% simple annual interest. They'll charge you a 4% simple annual interest on that $50,000. But they promise to have your $100,000 cash value keep earning interest and non-guaranteed dividend as if you never touched it. Three things are happening here. One, no loss opportunity cost. Your $100,000 didn't lose its earning capacity to keep earning interest and non-guaranteed dividends. Two, tax-free. Loans are not considered as income, so it's tax-free. Three, leverage. OPM stands for other people's money. The rich use debt to acquire assets and to have those assets pay off those debt. You see, the poor and middle class were trained to stay away and get out of debt. But the rich, they run towards debt. There's a different mindset. They're playing by a different game. That is the reason why there's such a big gap between the poor and the rich. And the poor gets poorer and the rich gets richer. So you purchase the rental property and the positive cash flow will go back into paying the life insurance loan. Remember that 4% simple annual interest? That goes to the life insurance company. But what you just did was restore your cash value and death benefit as if you never touched it. Let me show you an example. The one on the left is no loan and the one on the right is with a loan. These are the exact same policy. Notice on year 10, focus on the cash value and the death benefit. He takes a loan against himself for $200,000. You'll see that the cash value and the death benefit drop. Like I mentioned earlier, it is collateralized. When he finished paying the loan, what do you notice on the cash value and the death benefit? It's exactly the same as if he never touched it because you kept earning interest and non-guaranteed dividend even if you had a loan out. So here are the benefits. Your money is working two places at once. One in the cash value and the second one is the rental property. The second benefit you get is full control of the loan. You can pay it whenever you want, however you want, or never pay it back. That third one is pretty cool, but it's also a double-edged blade. Let me explain. So why is that you don't ever have to pay the loan back when it comes to a life insurance loan? Well, the number one obligation of a life insurance is to pay out the death benefit. So if you had an outstanding loan and if you were to pass away, all they will do is grab the death benefit and subtract it from the outstanding loan. And whatever is remaining, they will give it to your beneficiary income tax free. As this example, if he was to pass away at age 49 with an outstanding loan, his family will get $4.8 million death benefit income tax free. This is where the double-edged blade comes from. If you don't pay the loan back, which you don't have to, but know what happens, this is about awareness. On year one, it's a simple annual interest. And on year two and after that, if you don't pay back, it compounds on itself, could lead to lapse and tax event. Notice that the interest is accruing over time. I always ask, would you steal from yourself? You were going to pay Wells Fargo, Chase, those high interest on those credit card back, but not yourself? These are like your bank. Don't steal from your bank, which leads to the next benefit. Generation wealth. When you pass away, your death benefit is transferred income tax free to your beneficiary. Then your beneficiary will leverage off what you left behind. Thank you for watching.